Long-term holders of SPY can enjoy the holidays. After all, year-to-date gains in what is one of the world's largest ETFs are still sitting at 21.69%, and if you have been in SPY for 2 years, then you could have racked up gains of almost 42% in that time. Inflows to the fund continue to rack up with $9.1 billion of new money coming in last week. That's part of a pattern over 2021, which saw SPY move from a fund that was leaking money to one of the ETF world's best performers in terms of attracting new money. The ETF finishes the year with $436 billion assets under management, some $100 billion more than its nearest rival. There has been little respite for holders of the ARK Innovation ETF of late. ARK Innovation may have found a near-term bottom, however, but the end-of-the-year conclusion has to be that the companies it invests in are very much risk-on assets that do well when investors feel positive, but do poorly when investors are risk-averse. TLT, the 20-year plus U.S. Treasury bond ETF, was broadly unchanged last week, despite the fact that the Federal Reserve left the markets in no doubt that there will be rate rises in 2022 and will taper its asset purchases at a faster pace, trimming them by $30 billion per month. As interest rates rise, bond prices fall to allow their yields to be competitive with bank deposit rates. So we might have expected the price of TLT to weaken following the Fed meeting. That wasn't the case, however, and TLT traded down by just 0.9% over the last week, despite $1.1 billion being redeemed from the fund in recent days. When markets are uncertain or in a risk-off mood, long-dated government bonds are seen as a safe haven, and that risk-off sentiment in the run-up to the holidays has likely helped to support bond prices and, by extension, the TLT ETF itself. USO, the U.S. oil ETF, traded lower last week and is now down by 7.21% over the last month. WTI crude traded as low as $66.41 per barrel as markets fretted about the rapid spread of Omicron and the potential for further lockdowns, which would dent demand for oil at a time when supplies are expected to build. Naturally, the prospect over oversupply puts pressure on the oil price, and it will be tough for the price of USO, which is backed by physical holdings in WTI crude, to rally significantly. XLV, the S&P 500 healthcare sector ETF, rallied last week. We might have expected some more excitement to the upside thanks to M&A activity with Oracle making a cash offer to sector constituent Cerner, which rallied by almost 18% on the news. Cerner makes health-related IT and has annual sales of $5.5 billion, but with a market cap of just $26 billion, it's little more than a bite-sized acquisition for software and systems giant Oracle.